Lofty, cocoa has exceeded $9,000 for the first time ever as global supply shortages grip the market and chocolate makers grapple for beans. Yesterday alone, futures gained $700 per tonne, climbing for a fourth straight day. For more on this, Bloomberg's Ondiro Oganga joins us now from Johannesburg. So, Ondiro, what is driving the historic high in cocoa prices?
Vonnie, we are seeing historic shortage of cocoa beans hit the market. For example, Ghana is expected to record 650 to about 700,000 tons by September when they close this season. And this is literally down from the expected forecast of about 850,000. If we look at Ivory Coast, they've also said they're expecting a shrinkage in the mid-crop season. And this is what the market was looking forward to help boost cocoa supply because the shortage is biting. And a couple of reasons are behind this shortage that has hit the market. One, adverse weather conditions. We've seen climate change in areas like Ghana and Ivory Coast. Rainfall season delayed, and when it came, it was heavy rainfall. We saw the farms flooding, and when the high temperatures came, they were extremely high, affecting the farms. Ghana has also had financial challenges, and so the government was unable to subsidize fertilizer, and farmers did not have access to adequate fertilizer, and this affected production of cocoa. And more shortages incoming because European rules have changed, and they're going to stop cocoa that destroys the forest to hit the shelves. Also, they're trying to weed out child labor in the cocoa production value chain, and this is going to affect majority of cocoa farms.
Wow, so it seems like these high prices aren't even really benefiting the farmers. What do those changes that you mentioned in the international markets mean for Ghana?
It's not good news for Ghana, Vonnie, because one would assume that if cocoa prices are going up, then the farmers should be able to reap the benefit. But it's actually the contrast. If we just put it into the context of the farmers, many of them, their income has significantly reduced because of how much output has reduced. And remember, Ghana, they sell their cocoa to the government, Ghana Cocoa Board, and the prices are fixed at the beginning of the season. So farmers are not able to enjoy the good prices, the increasing cocoa prices at the international market. This has also affected Ghana because now farmers are opting to smuggle their cocoa to other countries and sell them to other countries in order to reap some benefit. And that also means that the money that goes to the Ghanaian government is way less. The government is also expected to take a hit here because cocoa is the third largest FX earner in Ghana. And because output is significantly reducing, earnings from cocoa have dropped by about a third to 508.4 million. What this means is that the cedi is not buffered because the country will not have enough FX reserves. And this is a currency that has lost nearly 8.3% of its value to the dollar this year alone.
Yeah, I'm just looking at the statistics, Ondiro, and CPI year over year is above 23% in Ghana. GDP year over year, 3.8%. You know, so GDP growth is still pretty strong, but it's not an economy that can really handle major changes in sort of what it's receiving for its exports, for example. Where is the money going that we're seeing for higher cocoa prices?
I think one of the things we need to remember, Vonnie, is the fact that Ghana is just recovering from a very tumultuous time that it has gone through. In 2021 and 2022 were really tough years for this country. We saw the currency lose over 60% of its value to the dollar. Debt to GDP hit over 80%. And we also saw that they defaulted on their debt later on. And so this is a country that has gone through a really difficult economic time. Inflation in 2022 hit a record high of 54%. So this is a country that is gradually walking back towards recovery. And the money that they're getting is actually not enough to sustain them. Also important to remember that Ghana is a heavy import country. And so the little that they get, they use it in importing, and not just consumable, but also heavy machinery, which takes a lot out of their budget.